If you're planning to diversify a portion of your wealth into gold and silver, you're probably thinking which one of these two precious metals is a better buy at the moment. Let me help you with your decision. I'm Dan from the Investment ABC, and in this video I'm giving you some arguments for both metals to help you with your decision. I will also tell you what I would do at the moment. Owning gold and silver is the best decision for your financial well-being that you most likely have taken. Since the financial crisis of 2008, central banks have relentlessly increased their balance sheets by creating new currency units and buying different assets. Until now, the expansion of the Fed's balance sheet only led to an increase in asset prices and not to price increases in necessities like food and energy. This was due to the fact that most of the currency was stuck in the banking system and didn't trickle down into the real economy. After the recent injections of 2 trillion US dollar in the span of just 2 months and the direct deposits of stimulus money into the account of citizens, prices of necessities will most likely skyrocket in the next few years. More and more investors around the globe are realizing that the ultimate destination for our current fiat system is most likely hyperinflation. Therefore, they're running into the safe haven of precious metals right now. Gold is making new all-time highs in almost all other currencies except the US dollar so far. Gold in US dollar is currently trading at roughly $1,700 an ounce, not far away from its all-time high of $1,922. I'm expecting the current rise in gold to accelerate once the all-time high in US dollar is broken. Silver, on the other hand, is really disappointing silver investors so far. It is currently trading at $15.27, while its all-time high was at roughly $50 an ounce. I will explain later why I think silver is underperforming gold significantly so far. The number one indicator precious metal investors are using whether to buy gold or silver is the gold-silver ratio. If we have a look at the ratio over the last 40 years, we can see that historically the long-term average was somewhere between 65 to 70. Prior to the creation of the Federal Reserve and the fiat currencies, the ratio was even lower, somewhere between 15 to 17. In deflationary periods, the ratio is increasing due to silver's industrial usage. When the economy is weak, the industrial demand for silver will decline. At the same time, those individuals with a lot of money prefer to buy gold over silver to hedge their wealth, since gold is more liquid and easier to store. Therefore, the price of gold is doing much better in times of turmoil. We can see that in 1997, when we had the Asian crisis, in 2001 during the dot-com bust, in 2008 in the financial crisis, and currently in the health crisis of 2020, the gold to silver ratio spikes only to decrease again in a couple of years when the crisis is over. Currently, the gold to silver ratio is at an all-time high of 120. In my opinion, this extreme gold to silver ratio shows the magnitude of the current crisis in comparison to the other crises in the past. The industrial demand for silver virtually collapsed and the investment demand can't compensate for that. On the other hand, gold's investment demand and the demand from central banks are increasing significantly. Wealthy investors and central banks are the driving forces behind the rise in gold prices. For the average Joe, gold is getting too expensive, and until now the average Joe is not running into silver as a cheaper alternative to gold. Most of the people don't even have a clue about gold and silver and their history as a store of value. The average Joe will start to run into these assets when it is obvious to everyone that this system will fail. Unfortunately, prices will be much higher by then. But when average Joe is finally running into silver, silver might explode to the upside because of how small the silver market is compared to everything else, with just 1.14 trillion US dollar, roughly the size of Microsoft or Apple. At that point, the gold to silver ratio will start to decline substantially. In comparison to the size of the silver market, gold's market cap is roughly 9 trillion US dollar. What is important to understand is that all the gold mined so far is still in existence, and most of it is held as a store of wealth by central banks and wealthy individuals. The industrial demand of gold is low compared to its investment demand. On the other hand, silver's primarily demand comes from various industries like the electronic or automotive industry, for example. Silver's investment demand is smaller compared to its industrial demand. In my opinion, gold has a better chance to have a role in the new monetary system than silver. Whenever fiat currencies fail, governments have no choice but to go back to gold or silver, something which has been working since centuries. We can see that central banks are net purchasers of gold since 2010, which means they are slowly diversifying away from dollar holdings. Since 2019, gold is treated as a Tier 1 asset by the banks, which means banks can hold gold at 100% of its market value compared to prior years where it was a Tier 3 asset which was classified as risky and therefore banks could only carry 50% of its value on their books. This shows me that at some point we will see gold playing a major role in the new monetary system. We could see at one point in the future some form of a digital world currency which is partially backed by gold. At that time, gold is going to experience a sharp revaluation to the upside, in my opinion. This is the number one reason why I have been buying more gold than silver the whole time so far. Silver has good chances to catch up either A, when the broad public is running into the precious metals, or B, after the new monetary system is established and gold experienced its revaluation, the economy might grow in a pace never seen before due to new technologies which will increase silver's industrial demand significantly then. Just going by the gold to silver ratio, investing in silver would be a smarter alternative at the moment. Experienced precious metal investors like Mike Maloney are preferring therefore silver over gold right now. In my opinion, this would make sense either when the current monetary system survives this crisis or when the public has time to rush into silver before the transition into new monetary system begins. So you have to decide for yourself what the more likely scenario is going to be. I for myself bought more gold than silver so far, but will start dollar cost averaging more into silver from now on, so I have exposure to both precious metals since no one can tell you for sure which scenario will play out. Currently I'm holding 15% of my wealth in precious metals as an insurance against government madness and a bet that gold will be remonetized at some point in the future. I don't consider gold as a good investment since it doesn't give you a return on your investment or produce anything. Be careful with betting everything you have on precious metals since we don't know how long central banks can keep up with their charade and hold the system together by manipulating all prices including precious metals. Crash gurus have been calling the death of the system since decades and you don't want to wait until you're old and grey. Although our current system has huge cracks, being diversified is the best strategy in my opinion. If the system collapses, 15% of your wealth in precious metals is enough to do well, but if it doesn't, you are still doing well with stocks and properties. The verdict is everyone has to own gold and silver, but don't bet your house on it. This is just my own opinion and definitely no financial advice. If you like this video and think precious metals are a must-have right now, smash the like button for the YouTube algorithm, subscribe and share. Also, I would love to hear your comments on which metal you prefer right now and why. Bye guys and see you in the next one.